Welcome to another episode of Boom and Bust. I'm your host, Tony Clement. I'm here at the News Forum, where all voices matter. As the year ends, it's time to check in with our resident expert on the markets, Tom Caldwell. He is the chairman of Caldwell Securities, and welcome back.
Thank you very much, Tony.
Before we get to our kind of year in review, of course, the latest is falling on us thickly here with concerns about the Omicron virus and it's disrupting travel plans and all things like that. So any thoughts on how this latest disruption from COVID is going to affect things?
I think it's becoming a little bit closer to home in many cases. So we have one of our lads came down with this right now. I think he got it from one of his kids, possibly, I don't know. So, it is quite infectious. What I hear, and again, you use the term experts. Experts don't exist anymore, certainly not in the medical arena, because remember the 2-week shutdown to flatten the curve?
Yeah, right.
So, nobody has a real handle on it. But what I'm hearing, maybe I'm hearing what I want to, is that it might not be as dangerous or destructive or fatal as, say, Delta or the previous variants. So we're going to have variants of this as we have a flu forever, it seems to me. But this one has got people's attention because it is happening, as you correctly say, right near the holidays, and people do not want their plans interrupted, whether it be for a trip or time with family, et cetera. So it's adding a little bit more stress toward the end of the year.
Yeah, certainly that's the case. Have you seen any impact on the markets yet?
Not really. I think we have, to the point of being everybody's a little bit more cautious toward year. It's been a good year by and large. But I think everybody's paying it a little bit closer to the vest. And there are other concerns other than COVID, all overlapping right at this time of year.
So give us your sense of 2021 and the markets more generally. We've got inflation concerns that cropped up, supply chain concerns. How do you assess this 2021 year?
Well, this is an old phrase, there's no time more uncertain than the present. This year's been a good year. On balance, many managers are up, well into the 20% plus performance numbers. That's a good year, and we all think we're pretty smart again, and that's kind of interesting. You're seeing a little bit of fraying toward the end of the year in these so-called meme stocks. These high flyers that are kind of disconnected from fundamentals, whether it be Tesla or whatever else. You've got the China thing going on, where companies being pulled out of the U.S. market. So there's this happening. The underlying market of the real economy still seems to be reasonably priced, but clearly inflation, these numbers are coming in very, very high. And I know the prevailing central bank wisdom is that it's temporary, but once you build in inflationary expectations, it tends to rumble on its own momentum after a while. The best line, by the way, was given to me by a client. She's a new Canadian. English is very definitely her second language. But we were chatting the other day, and she had one great line that I thought was great that I should send to all economists: money's garbage. She's right. She's been in the grocery store buying, and she wait a second, what's going on? So money's garbage, and I thought that was a good line. It cut through a lot of the nonsense, but inflation is really off the Richter scale on several, and a lot of this is government inspired. Make no mistake, we're printing and throwing money in all directions. There is no spending discipline in Canada or in the United States. It's just, let's see if we can go buy a whole bunch of votes and throw money at every problem. And that's not going to work. And that in itself is inflationary. And then also we're subsidizing people not working. So it's hard to get even great companies like, say, Linamar down in Guelph.
Right.
You can be trained as a machine tool operator. You can develop a skill. They have trouble getting people to come down. So I think we're subsidizing unemployment. And we do have supply chain problems. I go by a car dealer near Niagara-on-the-Lake. It's a truck dealer, and there's nothing on the lot. There's nothing there.
Yeah.
3 or 4 trucks. That's it.
This is what I hear is at some dealerships they tell their employees to park their vehicles at the front end of the lot, so it looks like they've got supply there. But so there's a lot of concern about supply. There's no question about it. We are going to take a brief break. We're speaking with Thomas Caldwell. He's the chairman of Caldwell Securities Limited in Toronto. Market trends, what 2021 has looked like. I'm going to ask you about a couple of more things about 2021. Then we're going to zip into 2022 a little bit, some of the trends that you might see there. some of the risks that investors might want to consider. And then we'll throw in a bit of politics, talk about the fall economic statement and the state of our fiscal policy in this country. We'll be right back after these messages. Welcome back to Boom and Bust. We're here with Tom Caldwell. He's chairman of Caldwell Securities. Tom, still talking about 2021 a little bit. What was the biggest surprise for you going through this past year?
Well, there are always surprises. What was interesting, the climate change group are trying to accelerate very quickly the movement into electric vehicles. And what surprises me is nobody's thinking about the logistics of this change and the timing of this change, and they're missing it. The numbers don't work at the present time in terms of generating enough electricity to power an all-electric automobile fleet, if you will, or a big number of them. That's going to take time, and we are going to be dependent upon hydrocarbons, certainly for the rest of my time, and maybe even yours, Tony, who knows? So we're going to go through this period of time. That was quite surprising that nobody's thinking about how it really works. Listen, we're all in favor of a clean environment and clean air, et cetera, and cleaning up the plastic that's floating in the Pacific Ocean. All of us want to do that sort of thing. But I don't think we can be dogmatic. There is like it or not, there is a reality, there is a practicality. So I was quite surprised that people missed that. That, of course, provided me with an opportunity to invest fairly heavily in the energy area in Canada. Because part of my job is betting against governments, which is a pretty safe bet, generally speaking. So that's worked out well for me, but I was quite surprised the logistics weren't really thought of. But there's other stuff going on. There's the China thing, there's the geopolitical, there's so much happening right now. You got to sort of filter through it because there's and there's a negative mindset with this COVID. So everybody's stressed.
Right.
So you have to try to look beyond it and look through it.
Now, those are very good points. And indeed, I think you're quite correct on the EV front and some of these other, energy front issues. The actual, how do you actually get from A to B? Everybody wants an electric vehicle now, great, but how do you power that? We still need the electricity supply and the transmission lines and all these other things. So that's something.
Plus, if you're going to buy one to go skiing and you park it, say in Collingwood for 2 days while you're skiing, you're not going to have 300 kilometers when you get in that car again.
No, that's right.
Cold and batteries don't go together.
They do not. They do. Living in Muskoka as I do, I tend to agree with you. Now we can look a little bit ahead to 2022. I know it's a bit of a mug's game to try to figure out what's going to happen in the year ahead, but what trends do you see?
Well, I always start off looking at the bad stuff because then I can see opportunities if it doesn't occur or does occur. For example, bad stuff. Inflation is still very, very high. Potential bad stuff, banks overreact and drive rates up too soon, too much. I don't think that necessarily is going to happen. In terms of Canada and the US to some degree, there is no fiscal discipline. They're just spending money and throwing money at stuff. Both countries are doing that. Both countries are being run by people that most of us wouldn't hire. But I think the big problem from Canada's point of view is that we are debasing, our big dollar generators, foreign exchange generators, are energy and autos.
Right.
And energy is being debased by the federal government as much as they possibly can to, buy votes. Similarly, our auto industry is being debased by President Biden and his one-sided incentives on electric cars. These are two very negative things for Canadian dollar. Mm-hmm. Similarly, the complete lack of fiscal discipline and throwing money at anybody who will vote for them is really dangerous. If you're a politician and you want everybody to like you, you're a menace. Leadership requires making tough decisions. And we're not only not making, we don't have policies going forward. So my point is that Trudeau the first got our dollar to 65 cents. I have every confidence that Trudeau the second can get our dollar to 65 cents. So danger signs there. So danger signs, too much interest rates going too quickly, weakness in the Canadian dollar.
Right.
So that sort of thing is causing me to lean a little bit more into the US market, away from the meme stocks, into real companies that do real things with real valuations.
Interesting. So yes, so inflation, interest rates, depressed dollar, threats to our major industries like auto and oil and gas. Those are some of the challenges that Canada's facing, right?
Absolutely. And then there's the wild card, the geopolitical, but maybe you want to get into that in the next segment.
Yeah, we are going to take a little bit of a break to get to the next segment, talk about geopolitical. That's very important as well for any potential investors and people who like to watch the market. So stay with us as we continue our conversation with Tom Caldwell. He's chairman of Caldwell Securities. We'll be right back after the break. And we're back here, Boom and Bust. I'm your host, Tony Clement, here with our monthly chat with Tom Caldwell, chairman of Caldwell Securities. Certainly welcome back, Tom. You and I wanted to talk a little bit about some of the geopolitical risks as you see them going into 2022. What's on your mind there?
Well, first is what I call the nightmare scenario. During the Second War, there was the Axis, Germany, Italy, and Japan. President Nixon was very effective in breaking up the synergy between Russia and China. But what if a new axis was formed again between those two countries? For example, suppose on a given day, each of them decides to act on their territorial ambitions. That is, China takes a swing at Taiwan and Russia goes into the Ukraine, all on the same day. I don't think America would react. They just wouldn't know how to react. And I'm not even throwing Iran, Israel into the equation, which is a tinderbox ready to blow up as well. So that nightmare scenario is real. I don't necessarily think it's going to happen in the now, but the timing would be after the Olympics if China was going to do something adventurous like that. Premier Xi in China he's not in solid ground. I mean, he's a guy that has to change where he sleeps every few nights. He's making a go for real power here.
Right.
And if this fits his mosaic and his plan, that could definitely be on. And I don't think America has the stomach for any sort of conflict right now, of any variety. There's a lot of economic sanctions President Biden was threatening. But I think that could be, nobody was going to stand against it. Nobody's going to come to Taiwan's defense, or basically even Ukraine, to that matter.
Yeah.
There's going to be a lot of talk. So that could be a real mess for markets for a period of time. Because right now, the world is safer when everybody's slightly afraid of America. Whether you like Trump or not, or Reagan, everybody's slightly afraid of him. This guy was a wild card, at least Trump was. Nobody's going to do anything against that because you don't know what he's going to do. Now, they're pretty comfortable that they'll do nothing. So that makes them adventurous.
Yeah, interesting point. And of course, President Biden had his phone conversation with Vladimir Putin recently and was very explicit that all of the sanctions that he mentioned, if Russia moved on Ukraine, none of them involved NATO troops in Ukraine. So that kind of sent that signal to Putin that he could act without coming up against NATO forces. So yes, these are trying times that way. Thinking about the U.S. of A. a little bit more, though, obviously you're bullish on the economy. You're not bullish on the politics of the USA, but you're bullish on the economy. Is that right?
Yeah, somebody once used the phrase, the sovereign strait of Coca-Cola. I think there's greater strength, greater resiliency in corporate America than certainly in the government. The world is disconnected. Washington is a different planet. And governments cannot create wealth. They can create the conditions for wealth or growth, and they can be detrimental to those conditions, Canada and US as well. The United States economy is more diverse, very strong, lots of power. There are lots of initiative, innovation. So if I had to say, where am I going to put my money? I'm going to lean in that direction very definitely.
Yeah, and do you get a sense, you talked specifically in the previous segment about the kinds of industries or economic activity you're interested in. You're not interested in, I guess, crypto or some of these other things. You like companies that actually make stuff. Is that right?
Absolutely. Although I do with non-making stuff, I still have very significant positions in the major U.S. banks. because whatever works well in an economy flows through to the banking system one way or the other. Or if you're printing money, it flows out of the banking system. So they have done extremely well. These have been good positions. And Canada as well. I mean, in Canada, the banks are a protected species. So, either one of those are fine segments to it. But manufacturing, innovation, a lot of the technology stocks, they've done extremely well. But government's focused on these. They're concerned about the power of the media types of stock. So they're going to have a little bit in the way of headwinds for a while. The crypto stuff, frankly, I don't understand. I understand blockchain as being a very good solution for things. For example, exchanges. As you know, we have a significant investment in the Canadian Securities Exchange, and they're driving to come to a blockchain solution for clearing and settlement of securities. That's the holy grail for the securities industry, because it's customer to customer and it removes broker risk.
Right.
So those are things that flow out of blockchain that are attractive, or flow out of the crypto thing. But the crypto itself, I see that as a point of vulnerability, frankly.
Welcome back to Boom and Bust. I'm your host, Tony Clement, here with Tom Caldwell. He's chairman of Caldwell Securities with our monthly market discussion. Tom, I should ask you, recently we had the fall economic statement in Ottawa by Canada's finance minister, Chrystia Freeland. Anything stand out to you from that fall economic statement?
Well, I have to tell you, I don't really pay much attention to it because it's all verbiage. I'm interested in what you do. I'm not interested in what you say. It's like when I invest in a company, I said, I'm not interested in good ideas. I'm only interested in people who can execute. And that's exactly the same in government. Show me what you're going to do, because I'm watching it, and what you're doing is you're spending money like drunken sailors. Mind you, drunken sailors spend their own money. But, this is something that is a concern to me. So no matter what they say, I haven't seen anything in the way of really creating growth, or not creating growth, but creating the conditions for growth. And everybody, on one hand, the government says, we're going to do these things. And by the way, here's a whole bunch of money for not working. We're printing money to anybody who seems aggrieved or sees themselves as victims. We just throw money at them. That's not the solution to most problems. I mean, it's in some cases like throwing money at an alcoholic. It's not going to help them. You're not really benefiting anybody that way. You're just encouraging that sort of behavior. And again, I understand when people are having tough times, you help people out. But we're going beyond that, I think, at the governmental level. And it's vote buying, basically, with our children's money, as far as I'm concerned.
Yeah, I mean, there was a lot of criticism. Obviously, the outward bound 5-year growth rates are going to be under 2%, which means you can't be spending at 6% or 7% increases in government spending when the economic growth rate. The short term was fine because there was a bounce back in business activity, so the Canadian government could get more tax revenue, but no one believes that the federal government, as to your point, it has the ability to rein in its own spending. That's basically the problem, right?
Well, what's that phrase? There's nothing more permanent than a temporary government policy, and they just can't stop spending money. It's like Trudeau the First. It's exactly the same. They can't stop spending money, and frankly, there's been no effective voice really speaking out about this to Canadians so that people could understand the issues at hand. So I don't see that we're creating conditions. We're creating debt, tremendous amounts of debt. And I see, by the way, the central banks in both countries as complicit. I think the governor of the Bank of Canada or the head of the Fed should go to the president, the prime minister, and say, listen, if you keep spending this money, interest rates are going here. We're not going to keep rates low just so you can be profligate in your spending. I think the central banks have a responsibility to the integrity of the currency. Right. Never mind job creation or anything else, that's fiscal. But their job is to protect the currency. And as that lady said, money's garbage. And what we've seen, by the way, is asset inflation. People have been the flip side of housing price and everything, people are trying to get out of cash into real stuff, whether it be stocks or anything else. They're trying to get out of cash because they're losing their confidence in it. and inflation at 2%, that's nonsense. It's just not going to happen. And even when it was 2%, it wasn't 2%. We're way higher than that. It's always been higher than that. I think we're looking at now 8, 9, 10% easily.
Mm-hmm, mm-hmm. And that, of course, eats into people's savings, whether they like it or not. So I guess we've got about half a minute left, Tom. Overall, you're looking forward to 2022?
Well, as I keep saying, despite all the negatives out there, I'm still an incurable optimist because our system is such that people come up with ideas, they create new companies, they find ways to do things and work around the obstacles. And that's the beauty of our Western societies. And that is always very resilient. So there are grounds for optimism, period.
Well, on that note, we'll leave it at that for this year. I wish you a very Merry Christmas to you and your family and a Happy New Year. And we'll catch up with you in January.
Same to you, Tony. All the best.
All the best. Well, there you have it. Tom Caldwell of Caldwell Securities talking about the year that was and the year to be. Lots of risk factors that are evident there, inflation and interest rates and so forth. But also, Tom, as usual, he's a straight arrow on this. He's always very optimistic and sees the silver linings in all those clouds. So hopefully that works out for him and works out for you as well. Thanks for watching today.